Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Mike 𝗔𝗕𝗎𝗓, provides you with insight and guidance.
Anything and everything real estate, as we always do on Real Estate Radio Live. Got a great show in store today. Guess who's in? Dun, dun, dun.
One of the best guests you've ever had.
That's right. The head honcho, Joe Cucchiara, is in with 𝗟𝗓𝗪𝗓 Mortgage, and you guys might recognize the name and the voice. So, Joe, how you doing?
Good. It's always good to be on with you. We'll have a good time.
I know. We always do. We always have fun. It's been a while.
It has.
Today we are going to be talking about down payments, and this is a really good topic, I think, especially for what's going on right now in the market, and I really think it's a opportune time for buyers, and so I think this is a good time to talk about what the money's going to look like to buy a place. So, but before we get to that, just a reminder for those of you guys just tuning in, always a couple different ways you can listen to the show on the radio at KDOW 1220 AM, or you can go on live online at kdow.biz or the RE Radio Live website, or you can download our app, the KDOW app or the RE Radio Live app. And you want to talk about that, Joe, and the iTunes and all that good stuff?
Yeah, it's exciting. I mean, you know, Mike. I mean, you're one of the drivers of this. We've been talking about it for a long time. We knew we needed to launch the podcast program. I mean, radio's great. We've loved doing this. We certainly reach a lot of people. But let's face it, in today's life and busy life and day and age, you have to give people a different way to listen to your content. Not everybody could, listen between 3 and 4. It'd be great if that's the way it is, but it's not. So one of the things that we really, set out to do was launch this podcasting program before the end of the year. And I think it's been maybe, 4 or 5 weeks.
Yeah.
Not very long.
Over a month.
Just really excited, Mike, because, we're getting, 100 plus downloads a day already. Mm-hmm. And it's on iTunes now. So you can go to iTunes and download. It's exciting to see that app. Yeah. Google Play. It gets distributed to all the different channels in terms of, social media every day. So just couldn't be happier about this. And so I would encourage all of our listeners, download, go to the website, reradiolive.com. You'll see a big old giant button that says podcast.
Yeah, you can't miss it. You definitely can't miss it. So there's a reason for that, folks.
That's right. No, it's great. Yeah. So they could listen to it when they're working out or walking around or doing whatever, and you're not tied to the 3 to 4 time frame anymore, or 2 to 3 in this case.
And the app also, you can download and listen to the not just in iTunes, but also in the app, right?
True. Very true.
So those are all in there as well. So we're getting fancy here on Real Estate Radio Live, I guess, but I guess we have to, right, to keep up with the times.
Yeah.
All those young folks out there, all those millennials. No, everyone listens to
we got some international listeners.
We
do,
right? Yeah, all over the world.
One dude in Italy.
Yeah.
And then
I think I told him to do it. We got one guy in Italy. That's right. Well, maybe because he found us a couple of Italian names on the radio.
I'm guessing, because I got to check this stuff out.
All right. So all good stuff. And again, you can download it on iTunes or the app, but we also come to you live 5 days a week, as you guys know, Monday through Friday from 3 to 4, with bonus coverage on Mondays or Wednesdays and Fridays from 2 to 3. And also a live show, as we always are. We'd love to get your calls on the air. 1-800-516-1220, 1-800-516-1220. Or you can go online if you're bashful, and you can go to 𝗥𝗲𝗹𝗪𝗏.com, and you can submit your question on the Contact Me section, and I'll take it on the air. And I've been getting a lot of different inquiries on this.
A lot of people like to use that.
Yeah.
I use the text line now, too, a lot, because I had, I would say now I get, yesterday I got 2 texts from the show. Mm-hmm. So it's great. We have to, it's up to us to give these people some different ways to communicate with us.
Yeah, and so, a lot of the content that we talk about on the show is due to listener feedback. Mm-hmm. So for those of you guys out there listening, I've done shows recently just based on some of the emails I've gotten. So keep them coming, I guess.
Yeah.
And again, don't feel afraid to call either. 1-800-516-1220. All right. So what do we talk? We're talking down payments.
Down payment.
And so let's what's been going on? Is there? Let's talk about refi opportunities, buyers with their offers and down payments. So give us a little bit of what you're seeing. I know what I've been seeing, but I want your take on it.
Yeah, I've been, there are times when I'm doing this show, Mike, over the years that I'll make note, and whether you call sound an alarm or tell people, it's really, really listen up because it's urgent. And I would say that time is now, just like several years ago when I was telling, when we were looking at, back in 2010, 2011, you're looking at property values and you knew what they did in 08 and 07, 08, and you're thinking, God, now's a good time to get back out there.
Yeah.
So when you do this show all the time and you're with professionals and experts like yourself and you get this data all the time, so what I would say right now is money is still cheap, but it is not going to last. I know you've been hearing that a lot, but my guess is the Fed's probably going to raise in December, as early as December, which is a few weeks away. And then you have the fact that the bottom line is this. You have low inventory. It's still a seller's market to a certain extent. It might be softening up a little bit with the holidays coming. But I think the bottom line here, Mike, is, first of all, money's cheap.
Yeah.
And if we could go all the way down to, depending on your situation, if you're VA or, you could get 100% financing.
Right.
You get as little as 3.5% down on FHA.
We're doing that right now with one, right?
Yeah, you could get 5% down with one loan with MI.
Yeah. You
could do 10% down. There's community programs which allow people with lower income and even credit scores to meet guidance. So the bottom line is, the one message I want to get out, money is super, super cheap. And there's a lot of different programs where you could get into a home for less than 10% or even more so. I think there's still the people still think they need at least 20%, right. I guess is the point.
Yeah. No, I think that's pretty right on, and people don't realize you can do 10, 80-10-10 loan,
right.
Which I'm sure we'll talk about. But I guess the question I get, I know, I'm sure you get, okay, how much do I need down? And they still think they need 20. The question I get from buyers is, what's going to make my offer look better? And there's still that stigma with FHA and that thing. And so my answer to that question is your offer going to look better with a down payment? My answer to that question is, well, it depends on the listing agent, because if they're knowledgeable on loan programs and know that these loans are fully qualified, it's nice to have a bigger down payment and all that, but really they go through the full approval process and it's solid, and some people just don't have that. It's hard to save 20% of $1 million.
Let's face it. Yeah, for an average home price, and you see this all the time. I would say, and I'm not a realtor. You don't understand unless you're in people's shoes, but it does frustrate me sometimes thinking that you get someone, and I'm working with them, that either FHA or 10% down. And even though they're willing to pay the same amount of money, and in some cases a little bit more,
right, that
offer will be ignored because the perception, and I say perception, is that, well, we got a stronger buyer because they're putting 30 or 40% down. That's not true. It's not true.
It's not. That's what I was trying to say, but more elegantly. Yeah. So thank you for clarifying that.
Just let me be the bozo.
Yeah, exactly. But no, it's not true. And again, it depends on the listing agent's knowledge of that, but most of them don't realize that it's not true. You know?
I hate to say this, and I know it's a little extreme, but it's kind of borderline discrimination.
Yeah. Yeah.
You got a person who has a very good job. They make income. We all know that you have to qualify these days. They take your blood and then some.
Yeah,
right?
Exactly.
So it's not that they're any different than the person that's putting 30% down. Let's face it, the person putting 30% down, that's great. God bless them. They got the extra money.
Yeah.
But not everybody has 30% down or 20% down.
Perfect scenario is at our sales meetings, we talk about scripts and things we have to use with our clients. And, in a market that's been so hot for sellers, they're getting a little greedy and they're getting a little more, to put it bluntly, they're getting a little bit more greedy, a little less realistic. So one of the scripts that we now use, and to help them realize how difficult it is. So let's say you have a seller that's got an $800,000, $900,000 house, and you get an offer, and it's not good enough for them, and maybe you get a really good offer. Well, one of the things is look, you show them how much money these people have to be making to make an offer on a place like this, how hard it is for them to save that down payment, and what the income level is, and it really opens the eyes up for the seller. Wow, they couldn't have probably done that when they bought this house.
It's true.
So it kind of puts more of the emotion into it and shows them these buyers are going all out for this. And so it's a new, way to kind of show sellers hey, don't be as greedy. Like look at what these people have to do to even get into this house, and showing them the income level it takes and showing them how hard it is to save. So I thought that was pretty cool.
No, it's really cool. And I would say the other thing on this, the down payment, and talking a little bit about the message would be, as we kind of move through this, money's cheap. It's not going to last. I could almost guarantee you that in the next 6 to 8 months, we're going to have interest rates that could be anywhere from 0.5 to 5/8 higher.
Wow.
What does that mean? Borrowing costs are higher. For some people, it may not make a difference, but some it can. And Mike, I guess what I'm saying is if you're on the fence, if you're thinking or if you're asking anyone that's in this business and takes it seriously, if you were to ask me, Joe, I'm ready to buy right now, but do you think I should wait? No, I wouldn't even hesitate.
Yeah.
Because of the reasons we're talking about. One, rates are good still. It's a little bit, as you come into holidays, sometimes it's a good time to buy because people are a little bit putting things on the side and a little, thinking about the holidays, right?
Yeah.
And the other thing is, I don't know, honestly, how anybody could say it will be cheaper 6 months from now.
Yeah.
At any aspect, whether it's the rate, the house, right? Even if the house goes up, even if it's a 2% appreciation or one, let's say it stays flat, your rates are higher, so it costs the money. So if someone says I'm going to wait because I said no, I just don't think so.
So on average, I know this is a hard question to answer, and I'm sure the people listening out there are kind of curious about this. Is if something goes up 0.5%, on average, how much is that going to decrease someone's purchasing power? Let's say in a conventional 20% down, how much is 0.5% going to affect it? Are we talking 50,000? Are we talking 100?
Well, it depends. If you let's just take the average loan amount around here is $500,000-600,000.
Yeah.
And if the rate goes up, let's just say 0.5%. You're talking about $160, $180 a month difference in payment.
Right.
So is that that's substantial. And then if you get closer to $1 million loan, that's a lot of money. And just to give you an idea, Mike, the average loan amount for me is about $560, $570 average.
Yeah.
So of course there's some lower, but I'll be honest with you, 30 or 40% of people are over $700,000 or $800,000.
Right.
That's a big difference.
Yeah.
In payment, 0.5%.
Yeah. No, it is. So that's the thing about the rates that people don't realize. It definitely affects your purchasing power over time. So, well, we got a lot more to get to. We're going to talk about how much you really need. What is the other struggles we're seeing with down payments. So, a lot more to get to. 1-800-516-1220 is the number. 1-800-516-1220. Radio Live, KDOW 1220 AM. We got the head honcho in studio today, Mr. Joe Cucchiara from W.J. Bradley Mortgage, and we are talking about down payments and what do you need, how do you structure it. We're talking loans, especially in a time like now where it's a good time during the holiday season to buy. And if you have any questions on that, 1-800-516-1220 is the number. And this segment is brought to you by Giorgio's Italian Food and Pizzeria and Frankie, Johnny, and Luigi's too, the best Italian food around with 4 convenient locations throughout the Bay Area to serve you. So you can go to Giorgio's and fjlitalian.com for more info on their famous happy hour.
It's good food.
Isn't that?
Go check that out if you haven't been there. My gosh. I don't live too far from it. Oh, man, good food.
Thank you. And
really good food.
Oh, you can't beat a $4 margaritas, martinis, or Manhattans all the time, right? So
no. We got to get your dad back on, by the way.
I know. It's going to be fun. He'll have a couple cocktails while we're on the air. Oh, man, that was a good time. All right, so let's talk a little bit on the previous segment. We talked about different loan programs and down payments, and is it a good time to refi or buy? So let's talk a little bit about what other than down payment. What other struggles are you seeing? Because obviously down payments, that's a big one, right?
Yeah.
That's the money they got to fork out, to buy a place. But what other struggles are you seeing along with down payment in the industry?
One thing that's been cropping up, I wouldn't say a lot, but I would say a fair amount that, other than the down payment challenges, someone that hasn't done a transaction, Mike, purchase or refinance for several years, let's say. And so 2 things, they don't realize how ridiculously conservative financing is.
Yeah.
And the other thing I'm seeing, I would say actually about on 20% of files, which is significant, something happens to people's credit scores they just don't know about. It could be something very, very simple. And if you drop below certain thresholds, it makes a big difference in whether you qualify or not, and how much your rate could be.
So what are some of those thresholds, for example, with with the FICO score? Yeah,
minimum for decent, I would just call it decent market rates, you should have at least a 680 middle score.
Mm-hmm.
But here's what happens, Mike, and we've done a couple of transactions together on these 80-10-10s.
Right.
You have to have at least a 700 score to do 10% down financing.
Yeah, and not a lot of people have that.
Well, I mean, so sometimes what happens is my point is I'll start a conversation with someone, and they'll say, yeah, Joe, I got 10% down. I'll go, great, let's take some information. Let's get you pre-approved. And then we pull credit. Let's say it's like 680, 690, which is not terrible.
Yeah.
But it does that. So if we catch it early, then we could help them, even though we're not credit repair experts.
Yeah.
But we can make some suggestions through the credit reporting companies to help them improve potentially so that, they could do 10% down.
And with some of those credit repair type of things that you help them along with, what are usually some of the options they have, and how long does it take?
In some cases, it's pretty simple, believe it or not. Now, thank God, with technology. For instance, there's a program called Credit Rescore. So let's say you have 680 and you need to get 700. Well, right on the report, tells you right at each score, it'll say possible increase in score. And let's say it says, your 680 says possible, 26 points.
Yeah.
So then right away you're going, cool, what do I need to do for that? Then you actually do a rescore, so it's a system that you run through, and it'll come look and give you a report and say, hey, listen, pay that Visa down to 30%, pay this one low to 20%. You got this credit, you got to clean that up, get that. So it's really cool that way with today's technology. At least they could tell you what to do.
Yeah, no, that's good. It's good not to have it just be open-ended.
What am I doing?
Yeah, exactly. So it'll go in and tell you, and that's great.
Yeah.
So credit, and the other issue was what again?
Just be aware that it's going to seem like it's going to seem very frustrating in some cases. That's why we should set expectations early on. That it's extremely conservative financing. They're going to ask for little things that are going to seem ridiculous.
Right.
That $200 check you got because it's a birthday, someone gave you a check, or maybe someone paid you back for something, or a ticket you bought. What's that check for $200 for in your account? And you're like, well, are you kidding me?
Yeah.
So it's just things like that. They're irritating enough, but they ask for all that.
They do. They make you write little letters and do this and that. And again, like you said earlier in the show, it's practically like they ask you for a blood sample, And but you have to realize that going into it, and you just got to get through it. Everyone's going through it, and it is what it is, as they say. So
absolutely.
Anyways, we got to take another quick break. If you have any questions, if you're interested in more down payment info or got a scenario, 1-800-516-1220, 1-800-516 Business Network. We have Joe Cucchiara in studio today. He's sitting on the other side of the table today with our interview, so it must be kind of weird for him. But
I'm a little fidgety. I don't know how to handle myself here in the passenger seat.
If you don't know how to handle yourself, give us a call, 1-800-516-1220.
What do you do as a co-pilot?
I don't know. I don't know. You just you're along for the ride, and
just in case something happens to you.
If the pilot keels over or something. I had a big lunch today, so I don't know. I might have to take a nap. But anyways, 1-800-516-1220. And this segment is brought to you by 𝗪𝗓, serving the Bay Area for over 45 years. 𝗪𝗓 is committed to keeping your living area pest-free by using the newest and safest technology. You can call 𝗪𝗓 today for a complimentary inspection, 408-259-5900. And Tim Denner is going to be on in just another couple weeks. So always fun to talk termites. And
Tim's a good guy.
Yeah, he is. And always like to freak people out a little bit and make them feel a little more paranoid about their house. No, he doesn't do that. So anyways, all right, let's get back into, we're talking down payments, loans. We briefly mentioned it in the first segment about how much they really need. So let's go through that again really quick, and maybe talk a little bit of mortgage insurance. I know this is a quick segment, so let's get through that.
So real quick, you could there's actually 100% financing, for instance, for veterans, and considering we're just Veterans Day was just Wednesday. Thank you to all those men and women that serve in the armed forces and around the world.
Agreed.
Thank you for your services. By the way, and you do deserve something. At least they could do is give you these loans that are.
It's a lease.
So the VA loans, Mike, you could, those are 100% financing. And so if you're a veteran out there, you always want to take a look at that. FHA is kind of the next step up at 3.5%. But remember, FHA is a government funded loan, and the reason, well, because of that, any kind of government-backed loan will have mortgage insurance.
Right.
So even though FHA is a great program, will allow 3.5% down, there is mortgage insurance, which means you have a monthly, what's called private, mortgage insurance that is attached to your payment.
And I definitely want to get into that in the next segment. What exactly is it, and how you get rid of it, or why to keep it. So let's talk about that. But keep going.
Yeah, and then your standard 20% down. That's pretty obvious. Then you have you can get in for as little as 5 and 10% down if you qualify. Again, so there's some one loan programs. The difference, Mike, on these one loan programs, it's a little deceiving. Someone will say, well, where's the MI? Well, what happens is they build the MI by increasing the interest rate.
Okay.
So that's how it's padded. So let's say the standard mortgage at this, and you're putting 20% down. Let's say you're paying 4%, right? Mm-hmm. But then I want to put 5 or 10% down. You're going to get one loan, but your rate may be 4.5% or 4 and 5/8.
Right.
So there's quote unquote not a monthly MI payment, but it's basically built in because you're paying a higher interest rate,
and it's going to obviously increase your payment, which is that difference of
It's a higher risk
usually
loan.
and that usually I don't know, the number I usually hear is anywhere from a couple hundred to 400 or 500 a month, so it's not cheap.
No.
But if it's what you have to do, the I guess the goal would be to buy and get some appreciation and eventually refinance out of it, which we'll talk about on the other side. Talk a little bit about the 80-10-10 loan.
Great loan. So a lot of people still aren't familiar with the 80-10-10, which means 80% first, 10% second, 10% down. That's what that terminology means. So the reason why people want to do this, Mike, is to avoid mortgage insurance.
Yeah.
So that's the way you avoid it. Mm-hmm. And for a lot of people, it does make sense. If you have 10% down, you avoid mortgage insurance. Yeah, people get a little nervous about the home equity line seconds because it is an adjustable rate. However, since I've been doing this, I hate to say it, but every couple of years, usually if people are, if the market's good enough, the good news about these, if the equity grows enough, then you could consolidate the first and second once you're at 80% or better, and eliminate the exposure of that equity line second.
Once you're at 80%
or better, loan to value.
Yeah, loan to value.
To your property.
So, for example, what he means by that is you originally, when you buy the place, you're at 90% loan to value with the 80 and the 10. You're saying once it increases another 10%, you can refi out of that and roll it into that other one.
And that's what most people are banking on.
Yeah.
How soon can I get there?
Well, in the Silicon Valley, it's not a bad play.
No.
Elsewhere, I don't know. We can talk about that. Yeah. But we got to take a quick break. 1-800-516-1220 if you have any questions for Joe or for myself. Joe Cucchiara with 𝗪𝗪𝗡 is in studio today. I'm Mike 𝗔𝗕𝗡𝗪𝗍. We have the pleasure of having Mr. Joe Cucchiara in studio today. You guys may have heard of him, you may have not. I don't know. But I'd love to hear from you guys.
Text us, call us if you've heard of me before.
That's right.
Let us know.
1-800-516-1220. And this segment is brought to you by Starburst Construction. They've been serving the Silicon Valley with all of its construction and remodeling needs for over 40 years. You can visit them today at starburstconstruction.com. That's Starburst, like the candy, construction.com. All right. So, we talked a lot about loans today, down payments. Really quick, before we get into down payment sources, because I think that's really what people want to know is show me the money, how to get the money.
Right.
Let's go back to mortgage insurance really quick, because some of these lower down payment programs do require it. And we briefly touched on how to get out of it with the loan to value. But anything else that we're missing or that we need to get out there on that?
No, other than just don't, if you have any questions, give me a call, or if you have a trusted advisor, call them, have them run some scenarios for you. Most people are visual. Put together some side-by-side scenarios, Mike, and that there's a lot of great opportunities out there, and a lot of people think that just because we went through that mortgage meltdown that there's no more loans for less than 20% down. Don't let anybody tell you that. There's, again, 100% if you're VA. There's 3.5% with FHA. The thing about mortgage insurance is it's a risk-based part of a product. So anytime you're putting down, for instance, let's talk about FHA, because you're putting down so little, the government, backed loan, it's a guaranteed loan.
Right.
So the government's saying, great, we want you to have home ownership, but we're going to take this risk with you, and because of that, we're going to have you pay mortgage insurance.
Yeah.
The good news, Mike, is just this year, I think it was April, earlier this year, they lowered the monthly mortgage, the percentage of it used to be 1.35% of the loan amount.
Right. It was big.
Yeah, really expensive. So that was a smart move. They dropped it to 0.85 now.
Yeah.
Significant. I mean, it makes a big difference for people.
Yeah. Well, good. All right. So if you have any more questions about mortgage insurance, give Joe a call, and talk. He can run the scenarios and do all that good stuff. Okay. So let's talk about down payment sources and where people can get those from. Obviously, the number one and the obvious one is savings, right? If you have cash, if you have a bunch of cash in your mattress, or if you got cash laying around or in your savings account, that's the number one source, right, Joe?
Mm-hmm. Well, so you have your savings. If you were fortunate enough to save some money over a period of time, you're a good saver. Obviously, if the money comes from you, that's great. What I see a lot now, Mike, is we do see a lot of gift funds, and that's by virtue of the baby boomers and above, really passing down wealth.
Yeah.
Over the years, I see that a lot with grandparents and parents giving gift funds and helping people get into their, more. I'm seeing that more than ever before.
Well, and I think, not to interject, but I think that's going to be huge because of...
I agree.
We've talked about millennials on the show before. I was just at lunch with some clients that we're closing next week on, and they're millennials, and I was talking to them about... millennials are going to have a lot of debt going forward, especially with college and getting their MBAs, and there's a lot of debt. So it's hard for them to save 10, 20%, and so they need these gift funds to help them out.
No, it's true. And gift funds, so I see a lot of that, and then some people will, take from the retirement. I would say be careful with that, and hopefully if you do consider taking money from your retirement, sometimes we see people borrowing against their 401k and different things like that. I'm not saying it's a bad idea, but be really careful that any time you consider this, Mike, that you check with your CPA and or financial planner. Yeah. Because there could be tax issues. You pay yourself back, but some companies only allow a certain amount, and there's some penalties. So there's just, you got to be careful with that. So always consult with someone on that. Some people will sell stocks and bonds, do different things, creative things to... the other thing, we do see, because it's a Silicon Valley every once in a while, is we do see companies providing down payments for some of the high level employees, or you see a lot of in partnerships, accounting firms, things like that. They'll put up $100 to $150,000 towards a down payment.
Are there any down payment programs left with cities at all? I know that was more prevalent a couple years ago.
Yeah, there's some lingering for teachers and firefighters and police, but I'll tell you, it's really hard because most of them have the funds are depleted. Yeah, and they don't renew. Yeah, that's the frustrating part. And then there's some of them are tied to income qualifying. Well, that's a ridiculous story. We could do another show on that because these poor people, they're making $70,000-$80,000 a year and they don't qualify for it. You got to be making less. Well, you want to say, how in the world are you going to buy a house when you're making $40,000 or $50,000 a year?
Yeah, and these are people. These are public service people, that we rely on. And it's just a shame. Going back to. Really quick, the retirement funds. Yeah. So just to clarify that, they take money out of the retirement funds and then they use that as a down payment. Mm-hmm. They put it back over time, just keep as a savings, or how does that actually work? Yeah, there's a couple different ways. That's why I'm saying this could be very complicated. So you could literally take money out of your retirement, and depending on what vehicle it's being held in, you might get hit with taxes. Mm-hmm. If it's a Roth IRA or something like that, you're not going to. Yeah. But you can in some cases. The other thing is that a lot of people don't know is a qualified IRA. You could actually take money out of a qualified IRA and use it as long as you pay it back within 90 days. I think it's either 60, 90. Don't hold me to that. It's one of the two. Yeah. No penalties. So some people will do like a bridge loan for themselves. Let's say they got to sell their house. Yeah. So they'll kind of make that cash bet quick. Yeah, exactly. Gotcha. So there's those things, and then 401ks. A lot of companies will typically allow you to borrow typically to 50% of that value. So if you have $100,000 in your 401k, typically they'll allow you to loan yourself that $50,000. Okay. Yeah. Very good. Awesome information. And we got to take another quick break, and we're going to wrap up on the other side. 1-800-516-1220 if you got any quick questions. Joe Cucchiara has been on today.